Thank you for tuning. Have with us today Ort Kelley, Covenant Funding. Ort, say hi to the people.
Howdy. Nice to meet you guys.
Always perfect day. I appreciate you taking the time out to come build with us. Credit worthiness is the topic. The good, the bad, the ugly, the, the weaponization, the control, and the opportunities. Give us the high
Definitely.
level. Give us the high level overview of it in general, and then we'll dive into some particular topics here I have prepared for you.
Yeah, so high level overview, right? Your credit worthiness is basically the lenders deeming you less risky. And what less risky means is you're able to repay, and that's because of your history, right? So you have a history of repaying debt, and then your credit score is going to reflect that. So that's what your credit worthiness is. You're less risky because you have a history of already paying debts off, if that makes sense.
Okay, I think we get that, and then let's start with the negative, then we'll go to the neutral, and then we'll enjoy the positive outcome. Okay.
Yeah, so the negative is how the credit score system works, right? So if you look at the chart, a good credit score starts at 670. Well, where does everyone's credit start if you have no credit at all? 500.
Hmm.
Right? So it's inherently biased towards people who have just started. So if I just started, how am I going to get my credit to 670 without putting myself at undue risk? Because my bank won't lend to me. Any other big establishment won't lend to me. How am I supposed to build my credit?
Yeah, you bring up a good point there because the average FICO score per FICO in 2021 was a 711. So they say, right?
Right.
Um, Now that works into when we say negative impact in the community, we gotta establish why this is gonna be value added to the community itself, right? So they can wrap their minds around why we need to come together and actually appreciate people in your position and come together and join in on a destination. And it's going to take some change of mentality and some change of processing and the way we normally go about things. So some of the things that we've been dealing with in communities near and far are redlining, predatory lending, even employment discrimination,
Yep.
access to housing, education opportunities, and even health insurance premiums. So what you're able to do, and if we as a community look at it like this, right, we're going to be able to change that verdict if we change the way we approach our credit worthiness and our sources of credit, right?
Correct. Correct. The sources are important, right? Because I'll give you a prime example. My credit union is Navy Federal, right? So I was able at the outset to get a $300 secure credit card, right? And so I'm paying that off, I'm paying that off, I'm paying that off. In 6 months, they raise it to $2,000. Now, here's the problem with that. One, when you get your credit limit raised, it is a new hard inquiry. I don't know if people know that. It's a new hard ding on your credit. So that's number one. Number two, how do you make the jump from 300 to 2,000? Right?
Right.
Like, just imagine you give an 18-year-old a credit card, they're playing with $200 and you give them 10 times that. What's more likely to happen when they start using that $2,000 credit limit and they make they probably don't even make that per month as an 18-year-old on average.
Mm-hmm.
So what do you see that starts to happen, right? The credit utilization gets to be way up there, right? Or they meet their limit. And then the interest rate is in the double digits. It's 18 to 26%. Now their first line of credit has already set them back, right? They already started at 500. Now their first line of credit has already set them back. So imagine they're going under 500 or they're remaining at the latter 500s. And this is going to persist throughout most of their early working life.
Wow. So that kind of ties in together predatory lending, right? Because not only did they target that group, all of us when we were younger, the natural in most cases, I mean, we got to get you connected with a leader from causes with kids, because she's teaching the youth at an early age financial literacy. So considering that most of the people don't have that experience by the time they hit 18, they're a naive group of people, and then they get temptation. So not only do they go into that position you're talking about, but then that also sets them up for some period of time thereafter to be now a high interest loan group of people and credit group of people based on their supposed credit worthiness, could potentially affect their discrimination in employment, right? Now you're jamming them up with access to housing and apartments and rentals and stuff like that. So by the time you get to education and healthcare, you're really already,
You're
in a
already a few
situation.
steps back. Like,
Wow. So,
yeah.
but I like that you mentioned the word secured credit card for people that may be younger and not aware of what that is and what the difference between secure lines of credit and non-secure. Just give them a high level overview of what that is for them.
Yeah, so secured means something of value, right? So there's a term that they use called collateral. And so a secured credit card specifically is a few $100s in cash depending on the limit. So if it's the limit is 300, it's $300 your own cash, and that is the collateral, right? So if you don't pay, they will take from your $300 to repay that loan. So it kind of keeps you honest. I personally think if you are going to use a credit card, you might as well just stay secured the whole time. That way
Really?
you can check yourself, because it's the increasing limit. Like, I know when I got it, so I got my first credit card like what, 21,
Hmm.
22. So I got the credit card, I'm paying it off, and just seeing that it went up 10 times, I'm like, oh, I started paying for gas with it. And people teach you that, hey, get the rewards. I think that's another predatory lending, is the rewards don't actually, like, the juice is not worth the squeeze. So you're spending on these credit cards trying to get the rewards. And what ends up happening is you don't have enough income to keep your utilization under 30%. So not only are you accruing more interest because you have a bigger amount of credit utilized on the credit card,
Hmm.
but you're also making it impossible to pay back.
Wow. So even if you're rotating through on like a okay, so now that brings us to the question of that age old, hey, use the card but pay it off every month, so it's actually a zero balance being carried versus carrying a balance. As you just said, with the rewards versus using and credit utilization, does that offset that if you're paying it off every month? Like if you're only spending on the card what you're going to pay before the next cycle?
So how the credit score works,
For
it
entertainment
actually,
purposes.
yeah, it might actually hurt you. And again, this is not advice. I'm not a credit counselor, right? I extend credit to people. But how credit works is sometimes it's actually worse if you pay it off every single month, right?
Wow.
Fully, right? Sometimes they actually want you. And I used to work for a credit repair company, Lexington Law, who just filed for bankruptcy. Um, but they one of the things we taught our people is you want to keep a small balance. So within, obviously, 1 to 30% utilization, because showing that you are actually using the card, and then you're paying it off. So you're keeping it under 30%, showing that you're using it responsibly. So they want to know that you're actually using credit. Because if you get a credit card and you don't use it at all, it's not necessarily going to affect your credit that much.
Mhm.
It'll only show as an open line. But if you never use it, how do they know that you're wise with your debt?
Right. So speaking of the debt, right? Let me get this on the screen here. Interesting, interesting thing here, because I like the fact that you can help people. Because even with that secure card, if you have, like you mentioned, collateral, so you not only have cash that you could put up as collateral, you can also put property. So a
Correct.
car, so if you have an automobile, for the young ballers out there that's got a couple cars that's paid off, and then they may not still be in that perfect credit situation because maybe they bought them cash or whatever. Well, that's an asset that you can put up as collateral in some way, shape, or form, right?
Yep.
So what I thought was interesting is this. So let's do it like how I want to do it. Let's do it like this. All right. So the 2021, the United States debt, or excuse me, GDP. was 23, as they reported, $23.3 trillion, right? And the reason I thought that was interesting because in 2021, the total U.S. mortgage debt exceeded $10 trillion. So look at that number. I think it's fascinating that the mortgage debt in the U.S. is almost half of the actual GDP annually,
Right.
right? So now what you're speaking about is a way to put people in position where they can actually have funding to pay for a home and not even have a mortgage.
Correct.
Talk about that for them for a moment.
Yeah. So what I do is unsecured. So collateral can be great in the sense that that makes it easier for your bank to lend to you. The issue with collateral is if you fall on hard times and you're not able to make those payments, guess what they can do? They can seize your property, right? People don't understand that this is one of the big ways that banks get bigger. This is one of the biggest ways that they build wealth, not only with fractional reserve banking, but being able to seize assets that they never had to pay for.
Right.
Right? They never had to pay. They created imaginary money, gave it to you. You couldn't pay, and now they have real property from an imaginary accounting system. So, what I'm able to do is allow you to purchase that asset outright. So now you fully own it. I can't put a lien on it. I can't repossess it. When you purchase the car with the funding or the house with the funding, the whole thing is yours. Now all you're doing is paying the lenders that I represent. You're just paying them back principal and interest payments over the length of that term.
Yeah, without that risk or that threat. So worst case scenario, the benefits you spoke of having a secure line is like if you do fall on the hard times, you just lose what you invested, but your credit still kind of remains for the most part somewhat intact because you're only going to go back to zero instead of like a negative state of some sort.
Correct.
Okay. So when we talk about the wealth gap, discriminatory lending practices contribute to the wealth gap. Now that's empowering people to overcome that, right? So employment challenges with job opportunities using credit reports in employment decisions, that's an added bonus for you as a security to make sure you get the job that you want by utilizing some of your strategies to protect your overall credit worthiness, right?
Correct.
Speak about that.
Yeah. So I actually kind of think it's weird that they even look at your credit history because like
Right. That's what you're there
right
for.
like when you think about it this way. It's like some many times people get credit because they don't have enough income. They don't have enough income because of where they work. They are where they are working because they can't qualify for anything better. They can't qualify for anything better because someone made these esoteric qualifications that no one qualifies for.
Or
Right?
people,
Prime
yeah.
example. I've been in sales for a decade. There are sales jobs that require this, and no lie, I want you to have a bachelor's degree, 10 years of experience, understanding of XYZ, whether it's a specific certification or a specific system for a mid level or entry level position.
Yes. Yes.
Now you tell for making 45 to 50 grand.
Yeah. And then linking, it's like because the banking system, which is directly and indirectly connected with the what people call the United States government, is all in a way of looking for products to sell to put people in a position where they continue to be dependent, right? So
Correct.
linking credit history to eligibility for student loans and jobs is amazing because then they say for the job, like you said, you need this degree, then you got to have a job that gives you 10 years experience, which means you in some cases you got to have the credit to get into that job, right? So student loan debt, right, reported as $1.7 trillion in 2021. So not only is that affecting credit, but it's also connected to this job, work, wage, ability, and then they get to decide your credit worthiness based off of how well you survive that gauntlet,
Yeah,
right?
right. So, to me, that's what it means by redlining. Like redlining doesn't only happen to one people, right? Redlining happens to most people,
Right.
right? And so that's how it happens. It funnels down, and it's a bunch of micro things that have macro results. And so, yeah, just like that, a bunch of micro decisions from legislation, from politicians, as well as just what we as the people permit, you know,
Hmm.
uh, that affects everything. And so, yeah, that's one of the other things. One of the things that I was thinking about as well is it's also what industry you choose to work in, right? So, prime example, everyone was like, "Oh, our student loans are going to be deferred," and they've been deferred, and they've been deferred, but they haven't been paid off,
Hmm.
or they haven't been expunged, which people have been wanting. But one industry has had this happen. So I know a guy who's worked with, he works at a hospital, so the healthcare industry. He's worked at the hospital for 10 years, and they got rid of all his debt. I have a client who she is taking student loans for nursing, and she got all of her student loans. She's getting all of hers expunged because of her tenure. And so, if you are looking for a way to make extra income, if you're looking for an industry that is wide open, I would say that's kind of the loophole. The healthcare industry provides that track where you could potentially have them expunge everything because you work for that sector. But every other sector isn't getting that same treatment. One thing I know, we've been behind on nurses and healthcare workers in general for a long time, for a
Right.
very long time, especially with COVID when they were just leaving work because they didn't want to, the treatment they were receiving, and then understanding the actual reports behind what was happening with COVID, that not all of them were actually COVID cases, and then not wanting to get vaccinated. That came with a massive shift of healthcare workers actually leaving the healthcare workspace and then going 1099 or into network marketing or starting their own businesses. And so if someone is looking to get a student loan, to me, that's like one of the only opportunities to do that.
Hmm.
Otherwise, you could do something like my funding, where you could pay for your schooling for all 4 years in one time, and then based on the loan terms, you can pay it. You can pay it back.
So that's a great point because wow, that industry is really looking to add the extra benefit to the package to say, hey, work for us, we'll take care of you. It gives you an additional goal, like it's like its own mini 401k kind of sort of if you look at it simplistically.
Yeah,
And now the gift and the curse is that many people do leave industries because of unfair treatment, unfair pay. That's an opportunity for the community to benefit if we can get the investment for them to now start up their own entities in the community, right?
correct.
So we got an option there under sustainable communities because here we go. This discriminatory financial practices can impede the economic mobility and making it harder for communities to break out of poverty cycles. And why are they like that? Because the local community doesn't have its own healthcare network. It's got to go to the big conglomerate. So if we can get some of those nurses and doctors that want to leave or wanted to leave and now out doing, like you said, sales and network marketing, selling books and stuff, to come together and start their own local facility, that'll help create sustainability in the community. Um, Legal and policy implications apply, right? So now that we've got that on the table, because it's also when we look at the overall weaponization, we're talking economic inequality, housing inequality, limited job opportunities, educational barriers, health and wealth being impact, community stability, and legal policy challenges. You made a great point. Now, fund your own education, right? Um, Student loans require you to complete a certain curriculum, right?
Yes.
So And when we look at college degrees and stuff, like what is it like? Often 40 to 60% of the curriculum is stuff that's not really actually relevant to what you're wanting to do. So,
Yes. I know from personal experience.
so so now if you can get your own funding and just go and get the specialized training, wouldn't that be like a jump start for some of these industry people, whether it's, maybe a doctor don't really need to take English class, right? I mean, but
Right.
you get what I'm saying? I don't know the particulars, but wouldn't that be like a jump start, a catalyst for us to get our people in our communities into positions with certifications and maybe condense catalytic schooling, and they can fund that themselves because they don't have the requirement of a completion, tenure because of student loans or something like that. And then, well, the student loan is unsecure, right? Or secure it with your home that you paid off the other way around, right? So talk about that dynamic for a little while for added value for the community.
Yeah. So what you made me think of when you were saying that is, I think one of the things, hold on, let me get it. For the community and doing the student loans, getting funding, what I was thinking is you can actually do like crowdfunding, because that's a good alternative, especially when we're talking about securing funds, because the goal is to what? The goal is to keep everything as much as possible in the community before it goes to big business. And there's several people in the community who are successful, but they usually do business with the other big businesses, right? The other thing is, if you are going to use funding, whether it's my funding, whether it's someone else's funding, or crowdfunding, is not buying into the other part of the bank's marketing. Think about it.
Okay.
Major schools. The banks want you to go to University of Florida, Harvard, Ivy League, right? They want you to go to these educational facilities. One, because they know they cost more. They're going to get more money. If you do graduate from them, they're so good at indoctrinating people. They know they're going to get alumnus money, right?
Yep.
And because so many of the politicians or wealthy send their children there, they're going to have that kind of money in perpetuity. And so when getting funding, you have to sacrifice the status of going to a prestigious school and just focus on actually getting the training that you need in your industry for a fraction of the price. That way, instead of getting a loan for 100 grand, you can get a loan potentially for 20 to 30 grand, take care of all 4 years of schooling, come out, and then you secure you a job where you're making above the median income for an individual, and then you can pay that loan off in 5 to 10 years versus continuing to kick the can. Now, I know 70-year-olds right now who still have student loans.
You said 70?
70-year-olds who still
Wow.
have student loans.
Wow. So, okay, so let's look at this. Thank you for sharing that. And what I hear in that is the opportunity for, like, go back to the nursing situation. We could do the same thing with the teachers. Teachers don't make enough. They deal with too much. They're in the institutionalized public school systems. Da 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 da. Da, right. So not only do you have that indoctrination that you mentioned when you speak on the university level and the college level, but and from the alumni, but it's also the network formation that gives them access and control over these positions when they go out into the field in the community and get into certain positions in your community, whether it's politics or a certain job, and they get access and control there, so they can control, like the tentacles, spider web of, behind the scenes, like deep state government type stuff, right? So now that's at a disadvantage because someone else is now able to control and regulate what's going on because of their network, right? So if we
Correct.
give the teachers the same opportunity as a whole and put them in a position, hey, you guys get together, form your own little school. Uh, it could be a local homeschool. Like I did a local homeschool initiative, so I studied that for a while. You could make that for the community and scale it out and still pass all the required tests, et cetera, et cetera, et cetera. So now we're actually coming to the point where the community itself could say, you know what? if we all get together with our 650 credit scores and our 27K provable income or whatever after adjustments, entertainment purposes only, disclaimer. And because I'm not the expert, we're just giving you some information here. So then imagine if the community all came together and got funding for the community, right? Now you no longer have to wait for the city or the county to build a library or a park, right?
We
You guys,
build it.
we build it, right? And it's all based on our funding. Everybody buys in with their credit, gets the loan. Now we can make businesses. Okay, now you send your kids off to your sons and daughters off to the local educational, and they get that. Then they can come back. We open the business for them in the community, and now there's a solid form of local trust because you know the people that taught them you trust. You know they got what you need for them to be trusted in running the business and operating the business. You can start the business with the trust that the community got your back. Sustainability, right?
Right. Right. Seriously, like I we people don't realize, like, if you study history, the things that we're talking about and that we're looking to do with sustaining the community, it's already been done. The issue is there was a crackdown, right? So we all know about Black Wall Street. That that in and of itself is not just for one minority. It shows that any people who do this, right, who strives to keep the dollar within a certain radius, a certain community,
Mm-hmm.
and keep it circulating, what they're able to do, right? In that community, the poverty level was lower, the education was higher, more people had homes, happiness was higher, everything was better because it was staying in the community. Whenever we go out of the community and we go to these global, large institutions, we're actually robbing the community of wealth because we're trading our wealth with someone who already has more than enough. Why not trade our wealth with Pasha's Cafe instead of going to Starbucks,
There
right?
you go.
Why not trade our wealth with Ort's Library, right? Why don't we go and frequent their establishments instead of continuing to trade with Amazon and Walmart? They've hit their goals. They're billions or trillions of dollars, right? Getting
Mhm.
money from me won't matter. Not getting money from me or my community really won't matter because they're still going to be $1 trillion organization, whether 1, 10, 15, or even 100,000 of us refuse to utilize them. But imagine if 100,000 of us only did business among each other, all of us would be wealthy.
Exactly. And for numbers, 2021, the average U.S. credit card debt per individual borrower was $5,525. 218 billion cumulatively lost in home equity due to redlining. $218 billion.
That's ridiculous.
So when you think about people being able to refinance or get home equity loans to start up a business, those communities have been stripped of the opportunity of $218 billion worth of creation
Right.
using their own properties, right? So empowering local. Now let's talk about some good stuff here,
Yeah.
right? So what we got is we've kind of set the table for how credit, can be weaponized against U.S. citizens and Americans, and with the social credit score system coming in, if you're a critical thinker, you might be targeted because you're not going to be easy to be controlled, et cetera, et cetera, et cetera. So there's no real I'm excluded from this potential for any one person, right? So now what we're looking at here is access to credit is going to empower the local businesses and entrepreneurs by reducing dependency on large corporations and government for funding, right?
Right.
Because at the rate we're going, with the government jobs increasing because they can't find jobs in local places, now that means people are going to have tougher times being self-supported businesses. So what are they going to do? They're going to turn to the government for grants. Now they're back in the government. It's going to be a big cycle going through the government. Government's going to get bigger, bigger, bigger. People are going to lose more and more control. So speak about that just from the empowerment standpoint, I know you have a success story you could share with how your platform has empowered the local economic development.
Definitely. So, for instance, we have there's a guy here. He's from Jordan. And I'm not talking about Michael Jordan. I'm talking about the country. He's from Jordan. Him and his wife, they're looking to uh, build their own, like, it's kind of like a barn type thing. And what they're going to do is they're looking to do like weddings and host those events. Because in North Carolina, um, all of those kind of venues are booked out for 18 months. They're booked
Right.
out for 18 months, right? And so you have a minority couple, they're foreign. They've been here for a few decades, raised their kids here, but they're still young, right? They're in their early 40s, you know, the American dream, quote unquote.
Hmm.
And so what we're able to do is not only give them the down payment for a larger loan, right? So they can finance it, but they're also able to get, you know, $1 million+ loan so that they can actually build the property, right? So that's what's powerful about being able to keep it in the community. You're giving them opportunities where there were none. And I also do a lot of collaboration as well. So I don't only lend, right? I have lenders and people in my network so that if I can't do it, we still can, if that makes sense. And
Right.
so that, yeah, that's just a one story.
Okay, that's dope because that's gonna reduce the reliance on the few major corporations that's dominating the economic scene, like you said, right? Gives the power back to the people and let them decide what they need for their communities. So independence in funding basically allows communities to shape their own growth, and I think that's important. So the problem with being reliant on either the big businesses or when we get to the social credit score, the grants, the gift and the curse of it all is they get to steer what they want done in your own community, right?
Yep.
So this is a
Yeah.
way to free us from that oversight and that thumb on you know, the foot on the neck, so to speak. So we're coming up on we're actually a little over 30 minutes. So
Well, I did
um
want to say one last thing then
yeah, I was gonna
about
say
that
that's
is
closing remarks.
so they say cash is king. It's really cash flow. Cash flow is king, but cash is still queen. And if you have the cash, you don't need to go to the bank to purchase the property. You don't need to go to the bank to build the building. You don't need to go to the bank to run the establishment, right? You might have to go through the local government for some of these things, right? Like education. But typically the red tape is kind of ripped off if you have the cash money. And so that would be the purpose of funding, right? You don't want to get loans frivolously, right? If you do get funding, we're going to use it to build the block back. And so that's what I would suggest. Anyone who's looking to do that, whether it's a franchise, whether it's starting your own business, whether it's real estate, whether it's healthcare, whether it's technology, you name it. If you're getting funds to give back to the community, that's probably one of the best investments you can make because there's enough money already circulating in these big businesses. Let's bring it back and start to thrive from the inside out, right? There's a lot of stuff going on out there, and if we worry about what's going on out there too much, what we're going to do is spread ourselves thin. Let's worry about helping our neighbor. There's someone next to you that you know, like, and trust, who you know can't afford to pay rent, who you know is living on credit. If I keep the dollar here and give them a platform so that they can get out of that, that is going to be the best investment that you can make.
Well said. Do one last insight for them as to how, in comparison and contrast, that this actually could put them in a better rate standpoint, other than you know the damaging effects of having mistakes made with credit and financial literacy in the beginning that put you in a lower credit score. But speak about how the rates compare from your network compared to the ah pirates.
Yeah, so in my network, because I represent like local lenders, private lenders, the rates can be as low as 5%. Obviously, your credit is going to play into that, but 5% and up is better than a guaranteed 18 to 20%. If you get an unsecured loan from any major bank personally, not only are you going to get less than what you can get in my network, because you can get 5 times more in my network, but you're also going to be in a guaranteed double digits in interest.
Wow.
And
I appreciate your time today, Ort.
of course, appreciate you.
Pasha Paroh, Y97, Ort, say bye to people.
Hey, bye. It was nice getting to show my face and share some knowledge. Thank you guys.
Hey, we'll look forward to having you back. And you out there, thank you for tuning.